Welcome to Make Money Count, the podcast by Cannect Home Financing. Be sure to visit MakeMoneyCount.com to find all of our old episodes. Be sure to rate, comment, and review on all of your favorite podcast platforms. If you want to send us a question, please send us a question to hello@connect.ca. That's Connect with an A. If you're not already a subscriber, be sure to hit that subscribe button. Thank you once again for listening to Make Money Count. And now your hosts, Marcus Severus and Justin Turner.
Happy Saturday morning. Though it's not Saturday morning like right now, our viewers right now, for our viewers, it's Saturday morning.
Happy Saturday morning to you, Justin.
Happy Saturday morning. This is our weekly episode of Make Money Count, your favorite mortgage and money financing, all that stuff show.
Did you do something to your hair?
I did. I wanted to be a little bit. I'm using something different in my hair, but I do feel like I look a little bit more dangerous. Like with this, it's a bit of like a, Johnny Depp in Crybaby.
I was about to say the same thing.
Yeah.
Totally a little
Feels
bit of Johnny
dangerous.
Depp.
Get me out of here.
Feels dangerous.
Get me out of here.
I don't think it's a surprise to anybody who's watching right now, but this week we're going to talk about mortgages. We're going to talk about finance, and we're going to make it fun because that's what we do. That's what we do.
We try to do it.
Yeah.
We have a good time.
For sure we have a good time.
Yeah.
And the other 15 people that are watching also have a good time, I'm sure.
There's actually way more than that. We aired an old episode 2 weeks ago, with the umbrella episode, and our emails lit up all over again.
Yeah, but that umbrella episode is like Emmy-nominated quality, right? That umbrella episode, we're giving away a free umbrella and a Connect mug.
Yeah,
Two. We actually gave away two of each.
Well, we said we were going to give one, and we ended up giving two.
Bonus surprise.
Shh,
Right?
you shouldn't tell people that.
Yes. Yeah.
Well,
Definitely don't tell people that if you email info@connect.ca, you might end up with an umbrella and a cup.
Yeah, but if you're nice, if you're like, hey, I love the show.
Yeah.
I love how many people email and say that you're cute.
Yes.
Yeah.
Someone in this past week emailed and said, hello, Marcus and cute guy Justin.
That was cute. I
Yeah.
like that.
Yeah. Which I really liked
I think it's great.
because it just affirms the fact that I'm way better looking.
I think it's that you're really cute. You are actually very cute.
Yeah.
Your personality shines.
Now I'm blushing.
Me too.
Blushing with dangerous hair.
Yes. That's
Oh
the
my
best
God.
kind of blush.
Maybe you should like cut a lock of your hair and put it in with the cups and the umbrellas when
Yeah.
we send it out. Okay, after this
It
show,
would be
that's
a
what we'll
hit.
send out.
It would be a hit for some. But only this one. Only this particular lock.
So what are we doing today?
We're talking about mortgages.
We actually we've been giving out the emails, so we actually have some emails that's coming.
All right, Matt, why don't we talk about some emails?
So I have an interesting email that we got, and I'm curious to know the answer myself. I was actually speaking with somebody or some of the other guys and gals from the office, and they were asking me what the answer was going to be, and I don't know. So I'm excited to hear your side of the.
I like that you guys
Sorry.
spring these on me.
All right, are you ready?
Yes.
So I got an email here. It says, "Hey guys, I'm watching what's going on in the world right now, and with so many world issues like the truck convoy and the Russia-Ukraine situation, like what do you think that's going to mean for mortgage rates? And I guess by extension, the economy, house prices, all that kind of stuff. People don't think that there's a connection to these.
Yeah. All right. The trucker convoy is kind of like, resistance to vaccine mandates.
Right.
And I think that if anything, it's going to show that a great degree of public opinion is now swaying towards abolishing some of the mandates that are here in Canada. Namely, I think the vaccine passport's leaving Ontario March 1st.
Yeah.
And then I think past that, like the next steps are kind of removing some of the masking and I think naturally that's going to happen. I think that maybe this might expedite it a little bit. The hope is probably that the economy kind of starts returning back to normal a little bit sooner. I think we're seeing that now anyways. So I think like our February, March economic data is going to look stronger than our January data did. To all of the kind of people who are very attentive to the inflation numbers, which are scary. Although that we're going to see growth because the economy is continuing to open up, I think that we're going to start seeing inflationary data come back to ground a little bit, just because of the way, and we've spoken about this numerous times, so I'm not going to beat the dead horse, but because of the way inflationary data is measured, it's measured year over year. So when you take a year over year number from an abysmal year to a really good year, what happens?
Rates go up.
Well, if you, the percentage difference between a bad year and a good year is more pronounced.
Right, of course.
And so as we start more normalizing the inflationary data from kind of a good year to another good year, I think we're not going to see the same level of uptick,
Right.
which might reduce a little bit of the pressure on the central banks. But still, inflation is clearly an issue. It's clearly something that's important to a lot of people. The next question being how the Russia-Ukraine crisis affects mortgage rates. I don't know if you know this. I used to do a thing from the TSX on CP24
Okay.
on
Yeah, I do.
Fridays at 4 o'clock when the market closed. And it was all about what happened in the world this week affects your mortgage next week.
Right.
So this is a good one. I feel like I'm back in the old days. Matt,
In the hot seat.
You know what, Matt? If you at the break can put up a clip, there's a CP24 clip of me when there was some instability in Libya and Gaddafi was still the leader and oil prices spiked. There's me commenting on how that was going to affect people's mortgages and actually offering my advice to Gaddafi on air. And a lot of my friends get a real kick out of that.
Love it.
Yeah. Anyways, so, and it's actually quite relevant because what's happening with Russia, Ukraine is very similar in its impact on what will happen or what happened at the time. So any type of geopolitical instability like this, be it, Gaddafi or Putin invading Ukraine or the threat of the invasion, if Russia invades if Russia invades the Ukraine, we're going to see oil prices dramatically increase. And if you think about a person's wallet as, having a fixed amount of money in it, if more of that money has to go to paying for gas, then there will be less money available to pay for other things.
Right.
And if you think of a person's wallet the same way you think of a company's wallet or a government's wallet, you see very clearly how the increase in the price of oil actually acts as a dampener on an economy. Like it slows an economy down. It'll be beneficial for countries like Canada that are net oil exporters because we'll make money for the raw material, the goods that we're selling. But generally speaking, it slows the economy down. So broadly speaking, the Freedom Convoy, which was the first question, so the Freedom Convoy will probably have an effect of stimulating the economy, and the possible invasion of the Ukraine by Russia will have an effect of slowing the economy. Now, those two things are definitely not equal.
Yeah.
There'll be far more pronounced effect from the instability in the Ukraine than the protests happening in Ottawa right now. But I think no matter what opinion you are of, the place that we're in right now, kind of geopolitically and economically, is such that, and I mean, obviously we are mortgage brokers and mortgage lenders, but it's such that it makes it a pretty good time to analyze your mortgage.
Right.
So if you play this out today and you think that inflation's really scary and interest rates are going to go up fast, which, consensus right now is 6 rate hikes in 2022. To be clear, within the next 2 weeks, the Bank of Canada is going to hike rates.
Right.
25 basis points, not 50, 25 basis points. There's my estimation. I don't think we're going to see 6. Again, I think we're going to see maximum 3. But if you think we're going to see 6, then you would be of the opinion that interest rates are going to rise dramatically. Those increases in interest rates will have a pronounced impact on the economy, which will mean that housing prices will drop. So if you're in the market right now thinking about refinancing your mortgage, understand that whether you want more money or not, if property values drop and you want more money, it'll be more difficult to get.
Right.
Because you're going to borrow against an asset and the price of that asset will have dropped. If you want the same amount of money, but the value of that asset has dropped, there's inherently more risk in the underwriting of your file, right? Like if you have a house that's worth $100,000 and that house becomes worth $80,000 and you're looking to borrow $50,000, you are going from borrowing 50% of the value of that home to 70% of the value of that home. 70, maybe a little less than 70. So that puts a different lens on the way it's underwritten.
Right.
Underwriters kind of clam up, banks kind of clam up when they see a market change like that. In addition, if that does happen, when it is time for you to lock in, if you think rates are moving, your rate will be higher, right? Conversely, if you feel as though the geopolitical situation is going to destabilize things and oil prices are going to spike, well, then you're of the opinion that financial instability will lead to continued low interest rates. And what also happens in these periods of times, like if you see the market drop significantly, banks have something called an interbank lending rate, which prices the risk of one bank leaving money with another bank overnight.
Okay.
And when that rate increases, variable rates increase. And we've seen this happen every single time. I mean, when COVID first hit in March of 2020, I can't believe I'm saying that. It's 2 years ago. It's crazy. So when COVID first hit, although the overnight rate and the prime rate were slashed significantly, the variable rate mortgage stayed the same because the lack of trust between banks or the increase in risk between banks caused banks to eliminate the discount to variable rate mortgages.
Right.
So variable rate mortgages were no longer prime -1.
Prime
they were prime.
0.2 or prime.
No,
yeah.
they were prime. They were prime +1, prime plus 10 basis points or 20 basis points. So instability will affect variable rate mortgage pricing. So this is just to say that like we're in a weird time. Regardless of how it plays out, if you're sitting on the sidelines right now and you're thinking, for whatever reason, the last thing I want to think about is my mortgage, it's a really good time to think about it, unfortunately. Mm-hmm. And when one of these two events occurs, I'm of the opinion that we're going to kind of slide through the middle of this, right? It's not as big and scary as the media might be making out either of these things to be. Mm-hmm. So I think that it's a good time to consider your options for your mortgage. And I think that at a time like this, you've got a wider breadth of options available to you. Mm-hmm. I hate distilling it down to like, you should do something with your mortgage, but
yeah,
we are mortgage brokers.
Listen, let's cut to the video of Marcus giving Gaddafi mortgage advice, and we'll be right back.
Let's do it.
To the TMX Broadcast Center to Marcus Ferris, mortgage broker with More Can Direct. Hi, Marcus.
Hi, how are you?
Good. The TSX closed lower today, and everyone's complaining about those gas prices, but oil shares did retreat after rising for several days. Still, though, $95 a barrel, of course, with all this unrest in the Middle East, in Libya. How will this affect households?
Yeah, I mean, it's a great question. I think until the unrest in Libya and the Middle East settles, Canadians are going to have to deal with these higher oil prices taking a bigger chunk out of their wallets. Oil dropped in price a little bit today, as you mentioned, to about $95, but it's still quite high. Libya has two problems that really gave it a pretty dramatic effect on oil prices. Number one, they've got a really unstable leader in Gaddafi, and number two, they represent a pretty significant portion of the world's oil production. I think that at this stage, the best thing for everybody is for Gaddafi to step down, but who knows if he's listening.
Right, of course, and there's international pressure on him as well. But do you think this is going to put pressure on the Bank of Canada?
Well, they're certainly not going to ignore it. I think it's going to depend on how long these elevated oil prices last for. The Canadian consumers are just coming out of a recession now, and with a big headwind like higher energy costs, it could have a pretty dramatic impact. So it's definitely something that the governor of the Bank of Canada will have to consider at the next meeting.
Okay, and we'll be watching it. Thank you so much for that. Thanks
Thanks
Marcus.
very much.
We're back.
And we're back.
So Justin told me that I can't make eye contact with
He's
him
not allowed to look at me
for the rest of the show.
because every time he looks at me, I forget what I was saying because he has wonderful eyes. Open them wide, Marcus. So listen. Oh, we have our friend behind us, and if you are an avid watcher, you know all about our friend back there. So this is, while you were speaking earlier, I was thinking about something, and you were mentioning these two kind of classes of people who think that interest rates are going to go up and people who think that interest rates are going to go down. I'm going to stare over here while I'm speaking so that I don't forget and get lost in Marcus's eyes. My question or my comment or my thought process there was a lot of people are invested in things right now, invested in things that might get turbulent if housing prices drop. And the entire basis of our fund, because if you're just tuning in for the first time, we have a mortgage investment fund here. The entire basis of our fund is the eventual drop in housing prices, right? So
it's not the whole basis.
Well, no,
it's definitely part of the investment thesis.
The
part of the way we lend money.
Yeah, exactly. I mean, the basis of our fund is to
Connect lends money.
Yes.
To people who we feel as though we can fix something.
Right.
That's it. Right. If you have equity in your home and your bank has said no, or they said something that was weird, like you need a line of credit, or
we won't refinance you to pay off your credit cards.
Yeah, like if something smells, Connect is there. Like, we're going to help you. Connect gives you the money that you need to fix something, and then we help you refinance to lower cost capital. We're the only guys that do this. We're the only company that does this in the market, right? So the whole investment thesis for Connect is predicated upon finding great borrowers. We keep saying this, right? Like, the secret to the success of Connect is our borrowers. It is the fact that we are able to speak directly to really good borrowers, get them the money that they need to fix something, and then get them to lower cost capital. That makes those borrowers happy. It makes them go around and tell people about how great we are. It makes other people come to us, and it protects the investor's capital. All of the money that we've been given comes from, it's either our borrowers or other clients. And it's our job to keep that money safe. Best way I know to keep that money safe is give it to people and match your motivation to those people. So when you're doing a deal for somebody and they call in because their credit score dropped because TD Bank gave them a whole bunch of unsecured debt during COVID, and they ended up with a 600 or a 550 beacon score, and now they got a job again and there's no way they can refinance because their credit score is too low. Well, Connect is going to give that borrower the money that they need to repair their credit, to take everything off of their credit report. And then once that credit score gets boosted up again, we're going to tell them the exact instant when they can lock in to a new variable or fixed rate mortgage to reduce the carrying cost of all their debt. And in most cases, especially given the interest rate environment we're in right now, they're going to end up with a better interest rate than they had before. So all this is to say, you do this every day on the phone.
Right.
All this is to say is the secret to Connect's success is finding good borrowers. So if you're out there and you think that a bank is taking advantage of you, or you went into a bank, or you phoned a bank, or you just don't think you're going to get approved at a bank, you give us a call. First thing we're going to do is try to get you approved at a bank or a mortgage finance company to get you a better deal on your first mortgage. And if for some reason you're deficient because your income doesn't meet the stress test criteria, or your credit score doesn't meet the underwriting criteria, or there's something deficient on your property, or you're in the middle of building a property, or you have a commercial building and you're not getting rents on it, Cannect gives you the money that you need and the game plan that you need to get that property, to get your covenant, to get your credit, to get your income, to get whatever it is fixed. And because we do billions of dollars of mortgages, it's crazy to think about how many mortgages we've done. But because we've done so many mortgages, we know where the goalposts are. They're not getting moved on us.
Yep.
We know how to get you back to lower cost capital if we can't get you to lower cost capital right now.
Yeah. I think of it as like the opposite. Like there's like a spin cycle that the bank, sometimes puts you in where, like you said, unsecured debt.
Can I look at you now or no?
Consolidation loans. You can look at me for now. But if I say it's too much, you got to look away. Consolidation loans, this and that. We're the opposite. You know what I mean? We are the opposite spin cycle.
There's so often that people will reach out to us that they reach out to us with this idea of getting a home equity loan because them refinancing doesn't work with somebody else that they've talked to already. And then they go down the rabbit hole with us and we go, oh, we can just refinance you into lower cost capital right away. And they're like, well, what about the home equity loan? And it's like, we can actually skip that step altogether right now because somebody else may have told you that didn't work, but they were probably looking at a commission. They were probably looking at making a bit of a piece off of you for 6 months or a year, and then maybe doing something down the line. But
that's well said.
Yeah.
We got no dog in the race. The only thing we want to do is make sure that we're leaving more and more happy customers. That's it.
Absolutely. I'm gonna explode. I got this other email. I was gonna save it till right at the end. I don't even know how long the show is. This timer here, is that like the end of the show or what?
Yeah.
Oh, it is. Okay, so we should get into this. Let's see here. This was the other email that I had that I like I said, I wanted to save the best for last. So, are you ready? Hello, Marcus and Justin. They forgot about Matt, but that's okay. Hello, Marcus and Justin and Matt. I'm going to put Matt in there. I've been tuned into your TV show for a while now, and 3 weeks ago, I finally picked up the phone and spoke with someone from your office about getting a second mortgage. Home equity loan, whatever you want to call it. I've been told time and time again that I wasn't able to get approved, but Monday this past week, I was approved with an A lender, so like a bank, a mortgage finance company, and it looks like I'm about to close. I was able to pay off all of my debts and look forward to my credit situation improving. Just wanted to reach out and say thank you. I really wish this is the best part, right? I really wish that more people would just pick up the phone and reach out to you.
It's great. That's what it's
This
all
is
about.
what it's all about.
That's
Yeah,
what I was
exactly.
just
So, okay, why does that happen? Why does that happen?
Because we have good people here.
Right. It's because it's also because
we care.
even down to the technology on the website,
Right.
the whole company is built on offering unbiased mortgage advice. So
Right.
if you come to our website and you fill in your address, you can download an approval in seconds for a home equity loan. But if the technology identifies that you might be able to qualify for a lower rate, fixed rate, or variable rate mortgage in first position that you may have been told no for already, it's going to let you know about it. It's also going to let someone on our sales team know about it. So when you call in, you're going to hear that, hey, you might have applied for a loan and you might have downloaded an approval that says 5.99% in second position on your home, but we can in fact get you a new first mortgage cheaper than your existing first mortgage, and there's net savings available to you. If that's on the table, you're going to hear about it.
Yeah.
Right? We have no vested interest in selling you one product or another. The person you're speaking to on the phone makes no commission. So it makes no difference to them what you're going to take from us. The whole goal is to get you unbiased advice to make sure that you're on more stable financial footing.
Yeah. Yeah. And I would say that happens more often than not. People find themselves down.
I saw it happen this week. I saw somebody come in. They had a first position 5%, a second position 11%. They came to us looking to see maybe getting something lower in their second position, and we just got them a brand new first, close to I think it was like $399.
I mean, listen, B rates are low right now.
Yes.
Yeah, they are. They really
so
are.
and again, we've spoken about that since the start of this podcast, is the quest for yield of pension funds and all kinds of institutional investors are clamoring to get yield. So that money is coming into the mortgage market, and they're identifying good quality borrowers.
You know what, Marcus, you just identified it, because like if people are, these institutions are ready to lend out the money so quickly, it's because of these inflated values, because they can lend it out at low rates. They have the capital. This is where it should be a pure indicator that this is the best time to take a mortgage, right?
I mean, it depends on someone's circumstance, but it's for sure the best time to, like, if it's something's bothering you, or you think that something could be optimized, it's a really good time, because things are in flux and they could get worse. It's if you're of the opinion that it's going to become easier or better to refinance in the future, then you should take a variable rate sooner rather than later. If you're of the opinion that things are going to become more difficult in the future, you got to make a move now. So either way, it's time to look at things. And the beauty of dealing with someone at Cannect is that you're not going to get pushed into something. You're going to just get some unbiased advice on how you can save money in the future.
Yeah. And if it doesn't make sense, then it doesn't make sense.
And again, like, I keep talking about this, like, we've spent so much time and money on the tools that are available on the website. The ability to go to a website where someone's lending money to you and just enter in your address, have us collect all of that information with your approval, obviously, and give you an approval, should clearly show you the intentions of the company that you're dealing with.
Mm-hmm.
Like, we don't care how quickly you need money. We don't care how badly you need money. We don't care if you've been told no before. All we care about is solving whatever the issue you have right now is. And if that issue is you've been told no, we're going to help you. If that issue is you feel like you're not getting a fair deal from your bank, we're going to help you. If that issue is you don't know whether to take a variable or fixed rate, we're going to help you. If that issue is I just want to know what the best rate on the mortgage market is right now, we're going to help you.
If you want to just send Justin an email and tell him he was cute.
Yeah.
Yeah, he'll help you.
info@connect.ca. I will either help you out with mortgage advice or be just like a container for you to throw your praise into. That's me.
Oh my God. I love the dangerous hair. That was the best way to start the show today.
Yeah. My dangerous hair went away though. Oh, there it is. There it is.
Listen, in short, I think we can continue. Like last week, we talked about inflation, maybe even a little too much. I think that we shouldn't get scared about things. We should just be prepared. And that applies to everything you do. And the only one little piece we can help with is your mortgage.
Mm-hmm.
So, we're here for that.
All right, guys. Looks like we're out of time for this week. We might still keep chatting.
Let's keep chatting.
We're going to keep chatting. And if you want to see more, just head over to our website, makemoneycount.ca. Is it .ca, Matt?
No, makemoneycount.com.
Makemoneycount.com.
Do we have .ca?
I believe we do. I don't know if it's redirected.
Oh, if we
There you
don't,
go.
we should get it before Make Money Not Count comes in and buys it.